What's up, guys? Welcome back to the channel. I hope you've liked some of the content that I've put out so far with the Tulobola challenge episodes. I really did take a bit of time to make those for you guys, so I really do hope that people or more people like, watch, subscribe, all of that jazz. Today's topic is a bit different from what I actually wanted to speak about. I actually had a video planned for you today about Bitcoin, about why I think Bitcoin failed and how we misunderstand Bitcoin. But I think yesterday, the whole day, I was doing research on other South African YouTubers who are specifically in this finance niche or this investing niche. Because I say investing because there's a lot of people out there doing Forex and trading who you'll find on Facebook, on Instagram, on YouTube as well. But I mean, people who are actually actively doing personal finance, and I think more to do with investing, are few and far between. I think the person I know who does the most personal finance is Nicolette Mashile, as I've mentioned before. And she's doing pretty well, but she's literally standing on her own. There's no one else anywhere around her or anywhere on YouTube that I've seen personally who are doing anything quite similar to her in terms of personal finance. And even what she does do, she focuses quite a lot on overall personal finance. So she doesn't focus too much on investing in property. She doesn't focus too much on investing in stocks. She doesn't focus too much on, getting out of debt and all of the other things that are associated to personal finance. So she's sort of just a personal finance generalist, which is great. I think it's quite good. But there's no actual resources out there on actual investing in stocks. And I mean, there's many people who have tutorials on how you can use platform X and platform Y, which is all good and well, and they'll all use particular stocks. You'll see them choosing. I mean, I wanted to roast this one guy. I forget his name now, but he basically had a whole bunch of stocks, and he had a S&P 500 as well, EFT that he was following. So like within his stocks, you'd have your Facebook, your Google, companies that are in the S&P 500, but also at the bottom have a EFT, which has all of those same things inside it. So if Facebook goes bad, not only does it go bad on his actual trade, it would actually go bad. Let me not say trade. I also say the word trade quite a few times, which I think is a problem because this is not trading, this is investing. I call it a trade because, the specific stock, it's trading. I use the terms interchangeably, but please know and understand, I'm not trading. What we're doing here is not trading. We are investing. We are long-term investors. We are not in it today, out tomorrow, which actually brings me up to another guy who as well was trying to use a platform to trade on these stocks, and he was upset when his order wasn't sold to the market. He lost out on time. Those things should never affect you if you're investing. If you're investing, you're in this thing for the long haul. You're in this thing to see it to the end. But yeah, the other guy, like I said, he would have, so if Facebook goes down, his Facebook would go down, but his S&P 500 EFT would also go down because inside the S&P 500, one of the companies in there is Facebook. And obviously the weighting of it is quite small compared to some of the other things. But the fact of the matter is, there's not enough diversification of even those people who are on this thing. I mean, I've seen other people, I've watched other videos. There are actually quite a few ladies who I think are doing quite well. They're choosing individual stocks, individual companies, and they're basing it off of something. They're saying, okay, I know ShopRite. I shop at ShopRite. ShopRite is always full. ShopRite's not going to close. I'm going to invest in ShopRite. Or they'll say, oh, I know people have spoken about Sasol, but I don't want to deal with Sasol too much. Maybe let's think of another. I'm trying to think of a dividend yielding stock, but there have been stocks, on people on YouTube who I've seen where they say, yeah, there's dividend yielding stock X, and based on dividend yielding stock X, even though the price might fluctuate, it might go up and down, I'm still able to make my money because it gives out a dividend. And that's the right mentality that you need to be following with this thing. I think far too many people in South Africa are missing out on the gains that could be made from actually investing in the stock market. And I'm sorry to bring race into this, but I think far too little black people actually are somewhat involved or are in any way, shape or form involved in the stock market. I'll give you a classic example. I used to work at a retailer. Maybe I'll tell you guys about it one time because I really don't like the place. It's the worst place for you to get your medication probably. You'd rather go to the one that's blue than this one that's green and yellow, but story for another day. But essentially, when I worked at this place, there was a guy who came in who used to be a manager at a Mercedes-Benz dealership. His dealership closed and he was retrenched, obviously. And obviously for him to go from there to come work at this drugstore, he essentially took, I think he said, almost a 60% pay cut, right? And this man had a wife, he had a kid. And I asked him, so now how are you able to maintain the same lifestyle that you had whilst you were working at Mercedes-Benz, now that you're working here at this store? And he basically said to me it was through his investments. He said he knew nothing about investing, he didn't understand what was going on, but as soon as he got his first job, he got a financial advisor who told him, okay, you need to put away X amount every month in case of a rainy day. Now this is just his investments. This is not his savings, this is not his retirement fund, because those are completely different things. Please as well, that's another thing that we'll chat about one day. Retirement funds and how you totally need to disregard them and make up your own plan for retirement. Because I'm telling you now, if you want to keep a particular lifestyle, there is not a single retirement annuity that I know currently that would be able to maintain my lifestyle how I would want it and like it to be. Because a lot of the times, you'll have your retirement annuity and it will build up over the years and it will be coming right. And then just before you're about to retire, what happens? Steinhoff comes and they have their mshiga. So those type of things can really derail you. That's why you shouldn't leave your retirement solely to that. And as well, this business of grant as well, we can't keep relying on government to be making grants or to giving us grants. I mean, really, we're all have the mind and the capacity to go out there and actually do things how we need to do them. So who am I speaking to today? I'm speaking to you when I'm Chita who's got a vrpa but your apartment is empty. I'm speaking to you, the young professional lady who just became a lawyer, who's just finished their articles. I'm speaking to you when Akoko, who thinks it's a bit too late for them to start investing. It is really not too late for anyone to start investing. You need to start investing today. And when I say today, I mean right now. I mean, drop off this video right now. Go and open up an account with any broker. I know that the barriers to entry seem high, but really there's not. There's one company that people like on YouTube. Just search stock investing in South Africa and you'll see that company will come up. I'm not going to mention their name. I do use them myself. I'm not going to mention their name because they're not paying me, first of all, but second of all, their affiliate program is really bad. I mean, for referring someone, you just get your fees off. That really does, that's horrible affiliate marketing. Any other company for affiliate marketing, you get actual money. But anyway, that's besides the point. Any platform, you can use that platform, you can use your bank. I know my bank, FNB, they do have a share investing platform. I know Standard Bank has a share investing platform. If you're with Capitec, Upambile, but stay with Capitec. They're a good bank. I need their stock price to go up. But yeah, just any bank that you bank with, go see what they have for shares. I know Sanlam has something that you can invest in shares yourself. I know there's just a wide variety of things. And if you're too lazy, either do this then. Either put it into an exchange traded fund that tracks maybe the S&P 500, not the JSE. The JSE is, yeah, you need to know what you're doing when you're going to invest in the JSE. But I mean, if you're lazy, S&P 500, go do that. Unit trusts, maybe you can try doing unit trusts. Unit trusts, similar kind of to EFTs, but different. It's, yeah, we'll go over unit trust one day. But one of the unit trusts that I'm currently investing towards is an old mutual gold fund. I think last year it was the best performing unit trust in South Africa. And you actually looked at why. I didn't understand. It just said gold unit trust, and I didn't actually know what that meant. And I actually went in and I got the prospectus and the document. So Old Mutual has these unit trusts, the gold fund, and it's essentially a bunch of gold companies that are put together, and that's the unit trust. So there's Abo Sibanye, Stillwater, Abo, who else was there? I'm sure Abo Anglo were there, but just essentially Abo Goldfields, just a bunch of companies that are mining gold, and they put them into one sort of bite-sized thing that you can get. I mean, if you can do that, just go do that. The point I'm making is that do something. Start investing your money today, because the sooner you start investing, the better it'll become for you. Even if a price goes down or up, these things happen. I mean, one of the main stocks that I'm in right now, which is Tesla, I think is way too overpriced. If you look at the PE ratio, which is something that we'll deal with as well in the future, it's got a way too high PE ratio, and it essentially means that the thing is overpriced. But because it's overpriced, it doesn't mean that you immediately need to now stop selling. It just means that their earnings haven't caught up yet to the actual price that it's at. But like I said, that will be a video for another day where we actually go over PE ratio and some of the other terms and terminology that you get when you're looking at companies. And another thing maybe that you need to consider is that technicals matter, but they don't matter that much. You need to actually know the company. You need to trust the company. I mean, the other day I was looking at there's a food company, is it called Quali Foods or something foods, recently in the last little week that went down a significant amount of money. And I looked at it and I'm like, okay, cool. And I looked at all of the technicals and the technicals were good. But I actually looked at their business and they have to do with food supply essentially. And that's an industry that I don't really understand. It's an industry that I don't really believe in because I feel as though there's a lot of wastage in food. You'll never see me investing in a restaurant, because I feel as though if you're doing the restaurant business, for example, the way you need to do it is that you need to have fresh food all of the time. This thing of freezing food is not on, but companies freeze food to sort of come down on wastage, which I guess helps the bottom line, but from a health point of view, that's not the best thing ever. That's why you'll never see me investing in is it Tiger Brands or Famous Brands, the one with steers and all of that, because those guys freeze the food. They literally, if whatever gets delivered to them frozen, when it's time for you to eat, they unfreeze it, they thaw it, they cook it, and then you get it. It's not going to stop me from eating it, unfortunately, but the fact of the matter is that's how they work. And because I look at the entire business model and I feel as though, number one, they're doing a disservice to us with the way that they prepare the food. But I think over and above that, in the food industry in general, there is a lot of wastage. Not to say that it's a bad investment. I'm sure you can invest in them and do quite well. I mean, the fact that these companies are both famous brands are still alive and kicking, and they have mug and bean and all of those things with the most expensive food ever, but that's not what we hear about. But the fact of the matter is, it needs to be a company and a business that you know and understand, and you can understand how they make money. People who invest in Facebook, you should ask yourself, how does Facebook make their money? Facebook doesn't charge you anything for having a Facebook account, but Facebook is selling advertising rights to companies in order for them to advertise to you. Facebook is also taking your data and they are building that or they're selling that to advertisers so they know what to do to you and how to sell it to you. Same thing with Google, and I'm sure there's a bunch of other companies. So you just need to keep in mind that every time you want to invest in a company, first you need to understand what the company does and you need to believe in that. More importantly, you need to believe that they'll be able to grow whatever it is that they're doing. If not grow, you need to then maybe look at the stock or the company and find out its value to see if it's undervalued or it's overvalued. Because if you believe a company is undervalued and you feel as though they have the right management team, they're making the right steps, making the right noises to actually recover their share price back to where it was, you should definitely invest in that. Classic example that I'm going quite hard in, it's actually a REIT called Vukile Property Fund. Vukile Property Fund, they basically have several properties that they are managing that are retail properties, and their share price, I think, is pretty much halved ever since the rise of the pandemic. But you know what I'm thinking? I'm thinking that is a share that is on sale. As soon as life goes back to normal, people will start going to shops again. People will start wanting spaces at new malls and so on and so forth. And I see Vukile actually coming back and actually starting to declare a good dividend. So Vukile is actually one of the properties, or not the properties, one of the REITs or property, not even a property scheme, but it's a REIT. A REIT is a real estate investment trust. Yeah, that's a REIT. And there's certain stipulations that they have to pay out almost, I think it's 75% of their profits. But we'll speak about REITs another day. But fact of the matter is that Vukile's share price really tanked with the rise of the current virus rather. But the way I see it, Vukile is gonna come back hard actually, and I'm really building up my Vukile shares just because I think it's really gonna come back in a big way, and it's a risk that I'm willing to take because things could go the other way. We don't know how long this virus is gonna be with us. I mean, I was just speaking to a medical doctor today who said to us, this thing is gonna be with us for the next 2 years, and if it's with us for the next 2 years, and malls, shops won't be having the same amount of income, they won't be paying rent, we could actually see Vukile go underground. I don't think that's going to happen. I've taken a look at the company and I think things are good and they have enough cash on hand actually to make it through the storm. But the fact of the matter is that companies like this, when their price is down, you need to get in, because when they 2x, when they 3x, when they 4 or 5x, people will come to us and ask us, no man, you must have insider information, or where did you find out about this, or how did you come about this thing? And it's simply just looking at a company, asking yourself what it is they do, understanding it, and going for that company. You need to understand, it is not a bet. We are not betting us. This is not Betaway, it's not Hollywood bets. We are not saying Arsenal is going to win 2-1 or Arsenal is going to score in the second half, because that hardly ever happens. But you're actually taking a calculated and informed decision as to why you're choosing a particular stock, why you're choosing a particular company. And that's just how the cookie crumbles. So I want to do something for you guys if you guys do something for me. And this is number one, or more than anything, to get your investment journey started. Like I said, you need to start as soon as possible. The sooner you start, the better you'll be, because of compound interest, like we will go over. But what I'm trying to say to you guys is that I want to put my money where my mouth is on you guys. So here's what I want to do. I want to fund a single person's account to the value of 5,000 Rand. So at the end of September, I'm going to put 5,000 Rand into someone's trading account. It has to be a trading account. You have to have funded it before, and you have to have at least picked the company or had a stock that you've been invested in with that 500 Rand, minimum of 500 Rand. If it's more, great, but 500 Rand is the minimum amount. If I see that and you send those to me, I'll put the details in the description of where you need to send it. But if you can send that to me and we reach 5,000 subscribers by the end of August, what I will then do is I will then take 5,000 Rand of my own money and I will deposit it into your trading account. With it, you can do what you want to do. If it gets to your trading account and you withdraw it, great, you can do that. If you put it in your account and you choose a stock, that's actually what I'm trying to get you to do, to pick a company, put it out on the line and go. So it's simple, guys. Share this video, get us up to 5,000 subscribers by the end of August, and I will do a nice thing for a single person. But I think over and above that, I want to actually take it as high as I can. I think between now and the end of the year, we can reach 50,000 subscribers if enough of us share this video, because I think this is valuable information I'm giving out. I think a lot of people can be helped or assisted and start their journey to investment just by listening to what I have to say and what other people have to say. Because as well, don't only listen to me or listen to a single person. Everyone who's on the internet is here for one reason: to make money. And with us making money, we're all going to try to sell you something or do something from you watching us or engaging with us. Yeah, everyone on the internet is out here to make money. So what I'm essentially saying to you is that if by the end of the year, I'm setting a target, if by the 31st of December 2020, we have hit 50,000 subscribers, I will deposit 50,000 Rand into someone's trading account. Yeah, it's a lot, it's big, but I'm sure you guys can do it. If not, my money is safe. It's 50,000 Rand I can get to use on other things. But here's what I'm saying to you guys. There's 50,000 Rand up for grabs. All you have to do is just share this video and make sure people are subscribed. Simple as that. Oh, okay, actually, maybe that's not all that you need to do. You also need to open up an account with some sort of brokerage or company or whatever the case might be, and deposit at least 500 Rand of your own money into that account and start trading. That's the first thing. So let's sum it all up. Between now and the end of August, we're going for 5,000 subscribers. Once we reach that milestone, I will give 5,000 Rand to someone, or deposit 5,000 Rand in their account. We can maybe do something for the other months should we make this initial 5,000, but it's all going to lead up to the one at the end of the year, where at the end of the year, if we've reached 50,000 subscribers, 50,000, I will then take 50,000 Rand of my own money and put it into your trading account. I think you should take the challenge. I think it's an easy challenge, and I think ultimately I want to benefit you. I want to help as many people as I can to actually get their money affairs in order, and actually start making real wealth, not money that comes in and comes out just as anything else. So take the challenge, like this video, subscribe, share, do all of those things, and I guess we'll see you on Friday.